Hello and welcome to my channel. So maybe you've been involved in projects for a long time, or maybe you're just starting to get involved in a project at this moment, and you're trying to understand what type of responses are you supposed to take when a specific risk is materialized. Don't worry, in this video, I'm going to take you through the kind of responses or the types of responses that you can apply to any risk in a project environment. So let's dive in. A risk can come as an opportunity or positive side, or a risk can come as a threat, which is the negative side. So there are certain specific responses that is expected from either you as a project manager or as a project team member on how you're supposed to respond in case the risk materializes, which means instead of being a risk, it becomes an issue, which means that future event, it has occurred. So how do you react to that? So in this section, I'm going to take you through the two sides of it, the upside and the downside on how to react to a risk once it has happened. So let's move on. There are basically 6 responses that you can apply to any threats or to any negative side of a risk. From my experience, I normally summarize them as RAFT. So you might be wondering, what does it stand for? So A, it stands for avoid. There are certain cases where it becomes very easy for you, either as a project member or project manager, to avoid a specific project totally. For example, if you know that there's a certain technology which is no longer going to be supported in the next 5 or 10 years, it's better you avoid using that technology. You go for something that you know you're going to use for a long time. Another example is, say for example, you're running a project where you're using a machine that is using, for example, a plastic part. In order to avoid either overheating or melting or machine breakdown in future, you might try to avoid that risk by going for something like steel or metallic part to replace the plastic one. So that's how you can avoid a risk in a project. It's very, very important. That's what I normally do in my projects. I always try to make sure that where it's possible, sometimes it's not possible, where it's possible to avoid the risk, avoid it, than to try to manage it in future. You need to take note of that as a project manager. I hope you have enjoyed the video so far. If you are new to the channel, don't forget to click the like button, the subscribe button, and the notification button so that you are the first person to be notified each time a new video is uploaded on this channel. It will also help this channel to produce more videos like this one. So now we look at the S part of it. S part of it on the threats or the negative part of risk is sharing. I normally see it in the investment scenarios. Say, for example, a specific bank, they want to lend money either to a specific multinational company, a big one, or even to a government, a big one. They normally go through what is called syndicated lending. So what does it mean? The exposure of one entity is too much. It might even bring down the entity. Say, for example, the exposure is about $4 billion US. So most of the companies would go down if they go for that deal, and then there's some issues in terms of repayment or in terms of the investment materializing. So in that case, you'll find that such kind of risks, they require sharing. So if you're running a project that has got a very high risk, to such an extent that it might even sink your organization or your business entity, it's better to share in case it happens. For example, I've also seen it in some entities, they go for insurance. If you know there's going to be a very serious financial impact, you can also take insurance against it. In case it happens, at least you can recover from the insurance. So these are some of the things where, these are some of the scenarios where you need to share the risk or the impact of the risk. Normally, on the financial side is the easiest way to share the impact. In other cases, you might also want to share the impact by subcontracting. I've seen in some of my projects that I've done, the business or the organization decided to subcontract so that they have a fixed amount they're going to pay. They don't need to pay extra in case there's some unforeseen event that might occur during the process of running the project. So subcontracting is also another option which you can go for in order to share the risk if you're a business entity, especially for high risk projects that you might want to run as a project manager. So the R for RAFT, it stands for reduce. So as a project manager, there are cases where you need to reduce the risk in a project. I am going to give you a very simple hypothetical scenario, life scenario. If you know that there's going to be a delay in using the road way of getting from one point to the other, you might want to reduce the risk by going through a train or maybe by flying to that place. So you have not avoided the risk, but at least you have reduced it, because flying, it might be delayed, but not as much as road traffic. A train might be delayed, but not as high as the road traffic. So that is how you can also reduce risk. There are certain cases where you are not able to reduce the risk. So this is one of the items we're going to discuss as we move on to how do you respond to some of these risks. So reducing a risk also in a project is very important. Like I said earlier, in your workshop, these are some of the questions you should be posing to the participants. How do you reduce some of these risks? How do you share some of these risks? How can you avoid some of these risks? That is very, very important if you can do that. So, the next part of it, which is the A for accept. There are certain cases, even in my experience, there are certain cases as a project manager, I had to accept whatever has happened in the project as a risk, because there isn't much that you can do. For example, you might have a high staff turnover in a project, or even death of your key members in a project. There's nothing that you can do. You need to accept it, and then you need to move forward by planning or introducing more people so that you move on with the project. There are certain cases where you cannot control anything. We have seen it with COVID environment. During COVID, no one had planned for a closure of 6 or 5 months or 3 months at all. Everyone was thinking that everything was going to work well. But when COVID hits us, we had no option. We had to accept that we have to stop projects. We had to accept that we have to protect the lives of the project members. So there are so many cases where you have to accept reality. You have to accept that it has happened. There isn't much that you can do but to move on and make sure you deliver the objectives of the project. So it is one of the responses that you also need to consider, especially when there are threats or there are negative impacts of those events. So the other response that you can do to any threats or negative impact of a risk is a fallback. So what do you mean by fallback? This means you are going to allow the risk to happen if you cannot control that, and then once it has happened, you fall back on your plan B or plan C action. For example, you might incorporate additional time in your planning. In case there's a delay or there's a risk of a certain contractor to delay some of the things that you want to use in your project, you can also allow that additional time to cover up for that. The other fallback could be additional budgets. You might also want to have additional budget specifically for risk coverage. In case there is something that is going to happen in the future that is going to affect the current budget, then definitely that budget is going to save you as plan B. Or even you have alternative activities that you need to take. In case this supplier fails to provide a specific product which is very cheap, you might have additional budget to go and buy from the very expensive supplier, but you know that at least within some hours, some days, some weeks, or some months, you're going to get your product. So that is also another form of fallback that you need to consider, especially when you're faced with a risk or a threat which you have no control, but you have to let it happen and then you react from there. In some cases, it's also worthwhile to transfer the risk to other parties. For example, I think I've said earlier, you might want to transfer the risk of overrunning your budget in a project by subcontracting to either vendors or even to other contractors. So it's also a very normal way to respond to any threats. You have gone through your risk workshop. You have identified that there are certain uncertain activities which you are not able to manage. For example, budgets. You're expecting that or anticipating that there could be additional money required to do some activities, and you are running on a very strict budget, low budget, and therefore the only way you can do that is to subcontract the effort. In case it's delayed, in case that risk materializes, the subcontractor is the one who is going to bear. Okay? The subcontractor is the one who is going to bear or is going to take care of the additional costs. So you have transferred the risk. There are also some cases, for example, insurance. You know that this is not going to happen very well. If it's going to happen, it's going to sink the organization. So you also transfer that risk. For example, civil unrest. In most cases, civil unrest, they are very costly. So through insurance, you can even transfer that risk when you're running the project. I hope you have enjoyed the video so far. If you are new to the channel, don't forget to click the like button, the subscribe button, and the notification button so that you are the first person to be notified each time a new video is uploaded on this channel. It will also help this channel to produce more videos like this one. Now, let's move on to the positive side of a risk. Remember our definition of a risk. It's any future event that can occur and affect the project objectives. One of them is sharing. Okay. In case there is some opportunity or there is some positive event, then you can even share with others. You can even share with others within the project. You can share with others outside the project. You can even share with others within the organization or outside the organization. So there could be an opportunity. Maybe you were about to create a certain product. Then there's some technological advancement which brought up some other technology which can provide you or which can enable you to produce better or even more of those products. So you also take advantage of that. Then the next part of it is enhancing. So what do we mean by enhancing? Enhancing is how can you make it better if it happens? Like the earlier example I've given you. You were working on a certain technology which was only going to allow you to produce 2 products at any given time period, say for example 2 months or 3 months. Now there's going to be a change of technology which is going to allow you to produce at least 100 of those, going to allow you to produce hundreds of those projects or deliverables. So definitely you want to make sure that you enhance, you increase the chances of that happening. Then this third part of how you respond to the positive or the opportunities from a risk is what is called exploit, which means you are going to increase the probability of that happening so that in case it happens, you can make use of it, you can take advantage of it in order to increase the chances of your project. This normally happens especially when you are creating a new product as compared to a construction project or even a software development project or even an event management process, which is also normally run as a project. So you need to exploit what has been coming out of the project. You need to exploit what has been coming out outside the project, and so on and so forth. Then the last part of the upside of a risk happening is also to reject. You also have an opportunity as a project manager when you're running a project to reject a specific risk. It might come as very attractive, but you might have realized that it's only a short-term item, and therefore you reserve your rights to reject the outcome of that in terms of upside. That means you are also in control on whether you should capitalize, you should exploit, you should share, or you should enhance the positive side that is coming out of the project. So that is very, very important to consider as a project manager. If you want me to create more additional videos based on what we have gone through in terms of techniques, in terms of concepts, or you have got any specific clarifications or questions that you have, let me know in the comment section below.